All right, Adrian, I think we'll get started. So, joining me today in the next edition of the Red and the Black webinar series is Adrian Forza, and we're going to talk today about Cryptocurrency 101. Cryptocurrency, I've got to say, I still try and get my head a little bit around cryptocurrency, and I know that a lot of our young staff seem to understand it a lot better than certainly that I do. So Adrian has worked in public practice for over 10 years, and he formed in 2019 the accounting firm of Crypto Tax Australia. The firm specialises in assisting clients with their cryptocurrency tax affairs, mainly focusing on individuals and small startups. He's got extensive knowledge in all cryptocurrency tax issues, growing from taking a practical approach to learning about the space, new products, and experimenting with new technology in this area continues to evolve very, very quickly. His passion combined with the exciting industry has seen the firm grow while still focusing on trying to provide in-depth knowledge of an ever-changing landscape of the cryptocurrency ecosphere. So welcome, Adrian. Thank you very much for joining us today on what is probably actually, in terms of the number of participants that we've got attending today, probably our biggest one ever, which tends to indicate the interest in this area. So just a little bit of housekeeping before we start. We'll have questions that you'll be able to ask, but we'll deal with those as we normally do at the end. You've got a Q&A function and a chat function at the bottom of your screens there. Please feel free to use those, and we'll actually come back to that right at the end of the actual presentation itself. So, Adrian, what is the blockchain and cryptocurrency?
So this is always probably the hardest question to answer, and it's always hard to sort of dumb it down as much as possible, because it is, I guess, fairly complicated in the way that the cryptographic coding works. But I guess in a sense, it's really, when you think about it in simplistic terms, just basically a ledger of transactions. Okay, so you would normally have, and you know, us accountants would know, our debits and credits. So that is, you know, recorded on the balance sheet or a trial balance. So blockchain is very similar, where it's actually just recording transactions for transactions that are sent over the network. So originally, well, Bitcoin, which is the original cryptocurrency, was invented by someone or a group of people called Satoshi Nakamoto. Now, no one still knows who he, she, or they are, which is a bit of still a mystery. Back in 2009, and back then I think we just had the GFC. A lot of people talk about whether or not it was fate that it was invented back then, but essentially what Satoshi was trying to do was solve what's called the double spend problem. And the double spend problem comes down to, if you've got money that's digital, just like a computer, you can copy and paste that money, and that's obviously an issue, because then you can just make as much money as you wanted to. So Satoshi came up with the concept around blockchain, where there were transactions that are being confirmed on the network that would eliminate the double spend problem. So essentially, how the blockchain works, and I like to talk about Bitcoin in this case, is that if I wanted to send 1 Bitcoin to you, that would then send a signal over the network, and that transaction starts to get included in what's called a block of transactions. Now, a lot of the time you'll hear the word miners and computers, and you know, they're not really people that are, you know, pickaxes. It's basically just computers that are processing the transaction all around the world. You might have thousands and thousands of these computers trying to solve cryptographic transactions to confirm the transaction on the network. So essentially, when one transaction has been completed, the next group of transactions begins to be processed, and each block is being combined with the other. And that's why it's called a blockchain. It's a chain of blocks. So that happens every 10 minutes. And every 10 minutes, there's a confirmation. So a lot of people talk about, well, you know, Bitcoin's very slow. It's not like a Visa card where you just tap and it'll automatically, you know, send it to Visa and your bank. Bitcoin is a lot slower just because of design. So it does take a little bit longer. There are different solutions now. But essentially, in simple terms, what you need to know is that it's basically just a ledger of transactions. The way that it is processed is through miners, i.e. computers that are verifying this transaction. And it's stored on, I guess, a server that anyone can see. And that's where you hear terms like immutable, where transactions cannot be changed in the past. And that's what makes it so special, because there's no way that you can change the blockchain or fraud or delete a transaction. You know, there's been cases where the FBI have caught out, you know, criminals for transactions they've done 5-6 years ago because they've just looked through the blockchain and they can never be changed. So, you know, when people say that, you know, Bitcoin's bad because it's used by criminals, it's probably one of the worst currencies you could use because of that immutability and the traceability of it. Yeah,
for older accountants like myself, you know, it's not dealing in cash and things like that, I suppose. But it's interesting. What can you actually use? What can you use crypto for? I mean, you know, can I get some cryptocurrency and go and maybe buy a car with it, or
yep.
invest in?
So there's different types of cryptocurrency or blockchains, and obviously the number one, Bitcoin, is really used as a store of value, or a payment method. Now, a lot of people argue, say, well, Bitcoin's not really a good store of value because the value goes up and down. You know, that is true relative to the US dollar, but store of value also means that if you have it, no one can take it away from you. And that's what's special about Bitcoin, where if you hold Bitcoin on your own personal wallet, there's no ability for the government or, you know, your family or the bank to actually, you know, block payments or take that Bitcoin away from you because of the cryptographic password that is extremely long and extremely almost impossible to restore. So that is one, I guess, use. There's other uses might include something like Ethereum, where you might have heard of. It's number 2, and that is really basically an operating system. So you could think of Windows, for instance. So Ethereum is basically, you know, Windows, and you've got different applications on Windows. You might have, you know, Excel or Google Chrome that operate on top of Windows. And that's where you have a lot of these other cryptocurrency projects that are built on top of Ethereum. So Ethereum is basically the base layer and it's the operating system. So that's another use case, because without that base layer, a lot of these other cryptocurrencies wouldn't be able to operate correctly. The there's also stable coins, which I'm sure a lot of people have probably heard about in the news over the last couple of weeks.
Tell us a little bit about stable coins, because that's really topical at the moment. And
Yeah.
things like
So,
Luna and things like that. Yes. Tell us a bit about that.
so like like all cryptocurrencies, there's always different types of stable coins. One that has been around the longest is USD Tether, and that and USDC, which is another stable coin, is always backed 1-to-1. And the key word there is backed. What is it backed by? Things like USDT and USDC are backed with actual US dollars. So they are, I guess, safer in a way where they're backed up by an actual asset. Something like UST and Luna, which has now crumbled, was really backed by an algorithm whereby, not to get too technical, but the idea was where there was a depegging of the currency. So we saw that UST stablecoin went from $1 to 99 cents, and then it went down to 95 cents. Essentially, the mechanism behind that type of stablecoin was, well, if it's depegged to 95 cents, then I'm going to arbitrage and try to make up the 5-cent difference. So that was really the whole idea around it. But when things started to turn sour and a lot of people lost confidence in the actual Luna project, the value of Luna started diminishing it as well, which diminished the value of the UST token. And then we saw an absolute just disaster. And you know, there was a lot of people that lost money. There was probably a few people that made money on the way down, but there was a huge amount of people that lost money. I think there was about $15 billion worth of US dollars in there that just basically got wiped within a few days. So
do you find that that then the confidence then in crypto is a little bit shaky now that something like that's actually happened?
Definitely. I think, you know, there was even a lot of large crypto funds that were invested in Luna and the UST stablecoin, and they would have definitely lost money. But you need to remember that a lot of this is experimental. You know, we're still at experimental stage, and every single time we have a boom and bust, there's always the period where a lot of these projects are building. They're, you know, behind the scenes. It's probably the best time to actually do your research during the bust, because that's when a lot of these projects are not worried about the price. They're just worried about building the best product. But look, it definitely does hinder the you know, the confidence in the public, especially when, you know, we thought that, well, this is a US dollar that's supposed to be stable. You know, if I wanted to buy a volatile asset, then I would have bought something more volatile. I mean, you know, I don't want to go into the share market at the moment because that's fairly volatile as well. But when you have that confidence of, I'm going to get $1 to $1, and then that basically goes to zero, you sort of start questioning, well, you know, what is real? What's a scam? You know, it's too good to be true, all those types of things. And there's always going to be, you know, issues that come up because it is experimental. You know, blockchain has only been around for 12 years, basically. So, yeah.
So if I want to go and buy crypto,
mm-hmm.
How do I go about doing that?
It's fairly simple. I think people sort of overestimate how easy it is. So if you've ever bought shares before on a CommSec account, you could easily buy cryptocurrency. There's a lot of Australian exchanges now, CoinSpot, Independent Reserve, that operate basically exactly the same as a CommSec account. The only difference really is that it's trading 24/7 as opposed to 9 to 4. So you'd normally do, you'd sign up with an email, your normal details, verify yourself, and you just deposit Australian dollars in from your bank account, and you'd click the buy button.
Simple as that.
It is fairly simple. I mean, if you wanted to buy Bitcoin or cryptocurrency 6-7 years ago, it was a little bit harder. But now it makes it so mainstream and easy that anyone can really do it. Even if you don't have a computer, you know, a lot of these exchanges have an app that you could use. Just the biggest thing about cryptocurrency that I always try and harp on to people is that you need to ensure that your security practices are really up to date. Because the issue is that if someone hacks into that exchange or into your account and sends that cryptocurrency off the exchange, unfortunately, there's no Mr. Bitcoin or Mr. CoinSpot that you can call to help recover those funds. You know, whereas if it's a bank, you know, the money is being transferred somewhere else, you can call the bank, you know, stop the payment, recall it, that type of thing. In crypto, you can't do that, unfortunately. So
it raises the question then, and in fact, it's one of the questions that has just been raised. It's probably quite a good one. So if you forget your password, it's a password, or it must be a password, I'll take, then basically you lose your money. Is that what we're talking about? And there's probably, presumably there's no recover your password button to click either, is there?
So it is different depending on whether or not you have your coins on the exchange or you have them on your personal wallet. If you have them on your own exchange, like a CommSec account, and you lose your password, then you can contact CoinSpot to reset that password or your two-factor authentication, that type of thing. But if you send it to an external wallet that you control, that you own privately, and you lose the keys to that wallet, then no.
Right. Okay.
So, you know, when you're first starting out, you know, you usually just keep your coins on the exchange. When you want to venture out further, you might send them over to your own wallet. You know, you would always send the test transaction first. You might send $10 over, make sure it gets there, and you've done it correctly. If it doesn't get there, then, you know, you've done something wrong. It's all right. It's only $10. So yeah, and look, there's a lot of YouTube videos and clips and tutorials now that guide you step by step on how you do that process. But yeah, you know, that's why I say to clients, just make sure that you always keep backups of your private keys. You might keep 2, one with yourself and a family member, just in case something happens.
So it raises the question that was raised, which is, so it's quite an interesting one, I think. So the question is, can you transfer Bitcoin to beneficiaries, or does the investment die with the owner? And presumably, given what you just said, there's probably, yeah, it can be yes or no, I suppose.
Well, it does come back to what's in your will, obviously. So if you have left cryptocurrency to your children, and that's in your will, then obviously they will pass on over to your children. But without the private keys of your personal wallet, there is no way that you're going to be able to retrieve that. So, you know, you want to make sure that if you're the person that's writing the will, you know, I would indicate that you've got cryptocurrency. And you may indicate and say, well, I've left my private keys in 2 places. One might be at a safety deposit box, and the other half might be at home. Whatever it might be, you know, you'd never put your private passwords in the will, just in case, you know, something happens. But that's what you would need to do. And I probably encourage people also where, if there is, say, a husband and wife relationship, and the husband's doing all the work, or the woman's doing all the investing, making sure that you do share with the other party or the other person where all those passwords are. Because if you pass away unexpectedly, you want to make sure that your loved one gets those funds and they're not lost. Yeah.
It's interesting. So given what's recently happened with stablecoin, given that is crypto becoming more mainstream, or what do you think is going to happen, really in the next, say, 5 to 10 years in relation to crypto?
I mean, if this cycle has shown us anything, it's just that more and more people are getting involved in cryptocurrency, whether it's from an investing or a building side. So 3-4 years ago, when we had that last big cycle and Bitcoin hit 20,000, a lot of it was retail investment, people FOMOing in, a lot of ICO, promising everything and never delivering. And this time around, we were seeing a lot of investment from institutions. Even Tesla came out and said that they bought, $1 billion of Bitcoin or whatever it was. That will slowly become normal. I've got a financial planner friend that would never wanted to talk about Bitcoin for the last 3-4 years, and now over the last 6 months he said, I'm thinking about buying some, and I think our firm will start offering these products to our clients. And that will happen. You'll obviously start out very slow. You might just offer Bitcoin, and it might be a 5% allocation, and then over time you might add more coins, and as long as there's some sort of regulatory product that can be sold, where people may can invest it through their super or other avenues, I think it'll become a lot more mainstream from an investment point of view. But what we really want to see is actual businesses using the blockchains as part of their day-to-day operations, which they already are. A lot of the tech companies are really eyeing off Ethereum now, in terms of its ability to help with their business operations. And as more and more people are in the space and more people are developing, and the technology gets better, you'll just see an uptick of actual use case over time. It doesn't really matter too much where the price is going. We always have booms and busts, and sometimes it's good to have busts, because the bad projects get swollen out, and you have some new projects, new ideas that come in and innovate. So I definitely think that in the future, it'll just be normal, and you won't even probably know that you're using blockchain technology as well. So for instance, if you've got I even spoke to a client this morning that said that he's trying to help businesses in rural areas to accept Bitcoin. And a lot of the software available is, you don't even really know that you're using cryptocurrency, because it automatically gets converted to Australian dollars for you, and you don't have to worry about all the tax implications and that technology side of things. It's just seamless. So yeah, it's not going anywhere, that's for sure.
So I suppose that you raised this issue of tax implications and things like that, and that's really interesting. So I assume that, and rightly or wrongly, that the maybe your client base is relatively young, but then maybe not. Maybe, as you say, it's becoming more mainstream, and others are definitely jumping in, and particularly when the institutions start to actually get involved with the cryptocurrency and the exchanges and what have you. So, what, in terms of your basic tax implications, of owning, buying, selling crypto.
Mhm.
We've got a lot of accountants here today. Just take us through what that actually looks like to some
Yep.
extent.
So it's basically the same as calculating capital gains on shares. Most, without going on too many tangents, obviously we need to work out, okay, well, are they a trader or are they an investor? That'll be the first thing to sort of work out once you've reviewed their file. Now, assuming that they're just an investor and they're buying and selling a few times, it's basically the same as capital gains on shares. You have your cost base, your proceeds, and you work out your gain and loss. Have you held it over a 12-month period? Those types of issues, and you pay tax on your overall net gain. The difference in cryptocurrency, though, is that you can sell Bitcoin for Ethereum, or you can sell Ethereum for straight Ripple. Whereas in normal shares on, say, a CommSec or an ANZ account, you need to sell back to Australian dollars first. You can't sell Tesla shares for BHP, for instance. So that's where it can get confusing, because you need to work out the Australian dollar value at the time in all these different currencies. Now, the other thing that a lot of investors actually do get wrong and assume is that it's only when you cash the Australian dollars out into your personal bank account is what you need to declare. So, if you go on the ATO website, it's clear as day. Any transaction, crypto to crypto, crypto to Australian dollars or US dollars, is a taxable event. Every single transaction needs to be calculated on the gain or loss that you've made on that. And that's where it does get difficult. It takes time. There are softwares available now. They are getting better. But you need to just, especially with clients, a lot of the time they may say, well, I've never pulled out into Australian dollars. And that is already alarm bells to say, well, okay, that's fine, but we still need to work out your crypto to crypto transactions, because a lot of the time, clients are either misinformed or they don't want to comply with the truth on that front. So you just need to make sure that what you're doing is correct, and the ATO does have a lot of guidance now on their website, making sure that if you're spending your cryptocurrency or you're using it for goods and services as well, that obviously needs to be declared in your business, or if you're an individual. And there could be some GST issues if you're a business as well, so that needs to be taken into account. But most of the time, a lot of people will just be buying and selling on an exchange.
So, I think many years ago, I heard that it was difficult to trace Bitcoin, and it might be around that, the comment that you made, about criminals using crypto, as a possible sort of, transactions and what have you. The ATO, obviously, they've got a lot of tools these days which enables them to download information, whether it's property transactions, share transactions, those sorts of things. They have the same sort of ability to actually track and trace crypto type transactions. How do they go about doing that?
It's a lot harder, a lot harder. And that's just because of the vast amount of exchanges that you can use, and the different protocols or the blockchains that you can use. So if you're just using one exchange and it's an Australian exchange, it's very easy to grab the data off the exchange. And the ATO does have agreements with the Australian exchanges, what's called a digital currency provider, I think it is, where they will alert the ATO that this person has traded in cryptocurrency And a lot of accountants will now have seen on the pre-filling report down the bottom, it says your client has been transacting in cryptocurrency for this financial year, and that will continue to happen. Now, that doesn't mean to say that, because a lot of times what may happen is a client might say, yep, I've only used one exchange, but then they've forgotten about the other 3 that they may have used as well. So you probably just need to make sure that you're asking the questions around, have you used other exchanges, or have you used wallets, to make sure that you've got a complete picture. But in terms of the ATO's powers, look, they will have part of the answer, but it's going to be very difficult for them to have the whole answer, just because they don't have reach into every single aspect yet. I know over time they probably will, but yeah, a lot of it is going to be based on an honesty system from the investor to make sure that they're declaring everything that they've done.
No, it's interesting. You might find that in years to come, forensic accountants are doing lots of work in relation to tracing through crypto type transactions. It might be very much a new generation of forensic accountants that.
Definitely. And because of the development into all the different new blockchains, it's very similar to, like, if you're in a forensic accountant for Aussie dollars and Chinese yuan and US dollars, and but instead of 100 currencies, you've got 10,000 currencies. So yeah.
So any questions, we'll raise them now. So there is a question from Daniel, and it's, one of my clients works for a decentralized platform and they pay him in crypto. How does the tax work? He is a company and registered for GST. And Lee, we'll might do that one first, if that's all right.
So he's a company. Yeah. Well, if he's just receiving, I guess, consulting fees from the work he's been doing, then essentially you still just treat that as normal income, as if it's a salary. Obviously, you would need to declare the Australian dollar value of that cryptocurrency at the time of receipt. But one word of advice is that can be dangerous at times because of the volatility. Now, that client might have said, look, I want $1,000 US for my work. They get it deposited into their wallet. And if they're now holding on to that cryptocurrency for a period of time, and that value goes down significantly, they're still going to end up with that revenue that they're going to have to pay tax on, even though the value of that cryptocurrency has gone down. So it might sometimes pay to at least sell down some of that coin, or at least have some money aside for tax purposes so they don't get caught out. Look, GST will apply, based on your normal GST rules. Are they invoicing, within Australia, all those types of rules. It'll just be a case-by-case basis, but it'll still apply if the normal rules apply as a consultant.
So another question from Daniel, and Daniel obviously knows a bit about crypto, because you might need to explain what this actually means to us. But in changing from cold wallet to hot wallet, is changing from cold wallet to hot wallet a taxable event? Now, I'm not quite sure what a cold wallet or a hot wallet actually is. My wallet seems to be always hot when my wife is holding it. But anyway, maybe just explain a little bit about that if you wouldn't mind.
Yeah. So a cold wallet, a lot of times a cold wallet, someone will, is usually like a hardware wallet. So it's sort of like a little USB, and it has an extra layer of security. A hot wallet might be something like a MetaMask, where you can use that within your browser, and it's just a lot easier and accessible to use. But the answer is no. I mean, there's no change of ownership. You know, even if you're changing it from an exchange or moving it from an exchange to your wallet, back to the exchange to another wallet, you know, it's always held in your ownership. So there's no taxable event there. No, you can hop around as many times as you want. Really, any capital gain or disposal is going to happen when you either sell it for another cryptocurrency, Australian dollars, or you use it to pay for a good or service.
Interesting.
Yeah.
So Joseph raised a question about what are your thoughts on the ATO accepting crypto as payments in the future?
I possibly not yet. You know, probably not for another 5 years, I'd say. It just depends on what type. I think the normal cryptocurrencies that we're talking about now, probably not. But if the Australian government brings in a central bank digital currency, which is sort of a knockoff digital currency, cryptocurrency, then possibly. I know ANZ were part of putting that together over the last few months. There was some news about that. So yeah, probably if there was an Australian cryptocurrency, then yes, they probably would.
Right. Ed asked a question, interesting question, this one. Is cryptocurrency gambling? Do you want my honest answer? I actually think it's a gamble not to invest in cryptocurrency just because of the exposure that it gives you. You know, it's not like any other asset. And I'm not talking about, you know, coin number 1000 on the list that has just come out. But is it gambling? Not really. You know, it's like buying a penny stock. It's the same thing. And, you know, just in cryptocurrency, there's a lot more volatility. And I think that's where people get scared off. But that's not to say that it's a gamble or it's a scam. It's just that the way that the market works, and because of the liquidity of the market, you know, you have these big ups and downs. So is it, you know, it's an edge. I guess it might be an educated gamble, just like the share market is. It's the same thing. Yeah. That's probably right in relation to all this. So there's no other questions, Adrian. So thank you very much for sharing your knowledge in relation to this area. You can see why your business is thriving, you know, because it is quite a very, very complex area and a very, very new area that you know, there are a lot of people are getting involved in, and you know, obviously it's mainstream media these days, particularly in the last couple of weeks. So look, thank you again for your time. We thank everybody for attending today, and we'll look forward to having you join us for our next Red into Black. So thanks again. Have a good afternoon.
Beautiful. Thanks a lot.